Hello, and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Here we go. 28th of October, 2018. No trade calls, recommendations, or response for their own stuff. We're here for educational purpose only. So, interesting, interesting times ahead. So let's see what's going on. Remember, there's a time change in the EU this weekend. Next week, change in the US. Should be a very interesting week with a lot of earnings coming out. I mean, of course, focus will be, to a certain extent, Facebook on Tuesday will be interesting, but really, Apple on Thursday is really the most important. The last general, the one that's been really hasn't hasn't rolled with tech, and as we know, our base case is that tech has peaked. It started to peak with that first ugly earnings out of Netflix, and then subsequently we've been seeing all these gap downs or gap ups that haven't been able to hold. The last ones we've seen is Amazon and Google. So it's just continuing. So our base case really doesn't change there. Now, remember, we've got month-end flows. We've got 3 more trading days to the month. And also, it's an interesting week in terms on the data front because we have a lot of central bank speakers, but we have BOJ on Wednesday, and then we have the BOE on Thursday, and we've got non-farm payrolls on Friday. So there's clearly a lot going on this week. I mean, next week's going to be even more interesting on the data counter, but we'll talk about that later on. Now, keep in mind that the market is still incredibly long stocks, incredibly long USD, and still very, very short VIX. So again, we'll talk about this a little bit more this week too, but clearly the action hasn't been too pretty across the board with a lot of damage done on those tech names. A lot of names down 20-30% from those highs. Banks looking ugly, XLF looking ugly. Not a lot of people speaking about Deutsche Bank, which is looking very ugly. You look some of the Italian banks, some of the Spanish banks like Banco Sabadell, except they look like death, right? Really not pretty. So it should be interesting. I think the easiest way to really get a feel for that, in terms of what do you mean, 50, you're saying it's ugly. What is it? Why is it ugly, and why has a lot of damage being done? Well, look at any index, but I want to focus on this update here on the major charts, but just look at the ES, right? And you can see this across the board. But again, the market hasn't closed, the month hasn't closed, and for all we know, we could end up closing positive, right? I mean, stranger things have happened. That's not the base case, but look at the action so far this month. 1, 2, 3, 4. We've given back 4 months of gain, right? And the month isn't even over, and we're into the 5th month, right? So this is a classical example of what, taking the stairs up and the elevator down. And remember, this is what we've been discussing repeatedly about these slow grind higher, overnight action, no volume chop, that sooner or later the market gives it back in a fraction of the time. And that's why we've been trading very selectively but very aggressively to the short side, right? Okay, so that's what this is the easiest way. I think the easiest way I can paint the picture of what does it mean a lot of damage is being done. Well, essentially 4 or 5 months gains given back in not even a month. Again, the month hasn't finished. We'll have to wait and see. So let's start and let's try and be a little bit more structured here and just look at the major markets, right? So we'll do SPX, ES, the bonds, crude, gold, and DXY. So our base case here hasn't changed on the market. So this is the SPX. You can look at ES. I'm just using this because we have the chart drawn up. But essentially, false break to the upside. At that point, very interesting to get short aggressively. Our base case is that at the very least, we're going to test mid-range, okay? Now, because it's a false break of this zone, the there are a couple of ways this can play out, but the original hypothesis is break of the high of the range, we're going to go back and test the low end of the range. Okay, so the first move is that you have to deal with. There are three levels which we're interested. There are three levels which we're interested in when we're talking about these kind of ranges. Is of course the top of the range, the bottom of the range, and mid-range. So on the break, on the initial break, you still have very interesting risk reward to get short, stops above the highs, looking for the market to come back down and test mid. Look at how technical the action has been here. We come right back down into this previous level. It's very interesting, and mid gets defended, right? Very, very nicely. Then what happens? We bounce, and where do we bounce? The 50 back of the move from A to B from highs gets defended, and where do we go down to? The 123 extension, right? Let me put that up with a fib just so you see how technical this move is. And the market is moving very nicely, very technically, and this has been the case across the board on all the indices. So we really can't complain on these moves, right? Back up, 50 gets protected, and we come right back into the 23. That's where we bounce, right? That's where we bounce the first time. Now again, look at how technical this is. Let's go down to just a 4 hour. So this is going to space it out. Let's actually go to a 1 hour, space it out a little bit more. So we're coming into that 123. Profit taking comes in, and what happens here? We bounce right into previous support, acts as resistance, and we continue to take out new lows, right? The week longs with stops below these lows. So it's extremely technical and you know, very nice action. So as usual, you know, when the sun is shining, you got to make hay. So we're going to continue to trade these moves, and so far so good. Now the way this is traded, what you have to expect is that sooner or later there's going to be a bounce, and we know the bounces can be very aggressive. But the base case here is no matter how hard we bounce, no matter what happens, this could even come all the way up into 2820s, 2850s. Our base case is still that this range is not resolved until we test those lows, okay? Until we test those lows, and our expectation is still that we're going to take those out. Now, I'd expect the bounces to be shallow here unless you get some kind of headline or something that saves the day. But any move back into that mid, you can call it 2700. We know all those pivotal levels that open the trap door on all the indices. We've discussed that in detail. That is the main bull bear line for the week. We could easily pop and try and retrace the 50 back of this move, but essentially this broader range here should hold for a retest lower. We'll have to wait and see. It could get choppy, but again, there's a lot of potential room to the downside. In terms of the bigger picture, that really hasn't changed for us, and the base case is still that the retracement in respect to what we've seen so far is still tiny, and we've held this belief for a long time that this whole action towards the end of 2016, 2017, where we had the election, this whole area, if the move gets ugly, this is the magnet that's going to attract. And we'll look at it this week again with the ES in more detail. But that's our base case on the ES. In terms of the ZBs, let's look at the bonds. What's going on the bonds? Now the bonds, we're getting a little bit of a bounce, decent move, printing down those low 136s all the way back into the 139s. Now remember, our base case was that we were going to try and find some kind of a base here, a little bit of a pop, and we're looking for tactical longs here. So that's working out so far so good, but it's a very choppy zone. I think unless we trade back above the 145s really and get daily closes above there, that you can really get a squeeze. 155s come into play, but unless we trade back above here, any rally, most people are going to look at it as an opportunity to try and sell off and and move back down. Now remember, reference, go back to the video we did on the bonds and the DXY in the market, and the difference between, you know, on a market sell-off on bonds rallying or bonds selling, and how that impacts the DXY, and how that will impact flows in general. That's always important to keep in mind. If you look at crude here, what's happening on crude? Crude, base case, we're getting an unwind. Market is very, very long. As we said, we did a special video on this too, you know, about those sells into the 100 here on the monthly. And our base case is still that as long as this holds, the unwind, if it gets a little bit more traction, we could easily see a move all the way back down into the 50s, right? And, you know, bar any kind of headline. But the way we look at it is on the weekly. If you remember, this was a extremely important zone for us, right? These big weekly highs, and you see how they you know, even on the move up, they kind of stalled here. We got a lot of chop around that range, but basically that's the kind of line in the sand. You know, any retracement here, any unwind of these longs here is still healthy in our opinion, as long as this broader zone, and you can call it the 60, holds from a closing basis. But if that 60 goes, right, if that 60 goes, we expect 5 at the very least, possibly $10 to the downside to come quick. But, you know, 5 would be the number to look at. Clearly, if you get any kind of headline, this could really rally. But even if we're going to end up higher, we think there's a little bit more downside to go here. Now, on gold, what's happening on gold? Well, gold, if you remember, we were looking for this to move higher off that 1200 back into the 1250s. Now, what we said is, especially for those trying to hold bigger swings here, you have to keep in mind, remember those bull bear lines, and we discussed that in detail on ES, Dow, Russell, NASDAQ, so 2700 on the ES, the 25,000 on the Dow, the 7,000 on the NASDAQ, the 16 on the 100 on the Russell, right? How those switches gets flipped, how the Momo, how the flows, how the CT, etc. All those things, how the margin calls, everything rotates around that level. Now, those levels, and you saw the acceleration for us, though the equivalent of those levels on gold, as we've been discussing, is this whole 1238 to 1250 range, right? And we said, even though it looks like it's very comfortably holding here, right, and it's probably going to go higher, we'd be very, very cautious about trying to get very aggressive buying the breakout of these highs, because we'd expect to see a lot of defense of this level, right? Rightly or wrongly, this is where we expect this level to be defended hard, okay? Now, our base case is still that at the very least, we're going to see 1270s come into play, but most likely the 1300s. And if that means on the market really crumbling, it could be more. But for now, that's not in the cards, right? We still have to respect this upside range, but be cautious on how we trade around this level. This is not a zone to get aggressively long. If anything, where you want to get aggressively long, or where we would look to get aggressively long, is when that switch gets flipped. And that means on a day close above the 1250, we expect to see on the following day a lot more liquidation, a lot more buying coming in, etc., etc. And we expect that to be the switch that's being flipped for $20 to the upside, possibly 50. But here, respect this area. Don't start getting long into a brick wall. And again, we would still think that ultimately any dip is an interesting buying opportunity, but we would be very, very cautious, because the wheeling and dealing we've seen on yuan, the fact that we still feel that USD-CNH has to resolve, we would not be surprised by anything in general, but here we would still not be surprised to some kind of an ugly move on gold back into the 1200. If we get that, we will definitely look to be buyers. And remember, that's a lot of that is also linked to the discussion on USD-CNH. Now remember, we've discussed that in detail in previous videos, in the weekly webinars, etc., etc. If any of the subs want me to do a special video on USD-CNH, how that's been trading intraday, the levels, and how that affects our intraday scalping on euro and our positions on gold, etc. I can do that, even though I'm pretty sure it should be fairly clear because we've discussed that in detail. But if it's not, just send me an email. We could, and I can do that. Now, the other thing is, if you look at DXY, is basically we're hovering here, a lot of chop. I'm not going to go into too much detail here because our base case hasn't changed, right? You can look at all kinds of patterns inside this zone. I'm going to keep it very, very simple. Our base case is still, there's a lot of choppiness here. This is a huge chop zone, and we are not going to get chopped up by trying to read anything that happens inside here on a 1 hour, 4 hour daily time frame. The only thing that matters for us in terms of the bigger moves are the weekly closes. Okay, so no change in outlook, chop zone here, a weekly close above, then we could really get a move to the upside. 98s are in focus, but then this could really confirm the structural bullish case for the dollar. Remember, we did a video on this looking at the big structural bullish case and the big structural bearish case on the dollar, so that would probably confirm that, or a break below this 28.9260s that would confirm the structural bearish case for the dollar. But as far as we're here, it's still very, very choppy, and you can see that's being translated across the board. Now, just a couple of charts to keep an eye out for. I know everybody and their grandmother is shorting the pound aggressively. Just be cautious here, right? Just be cautious, because if anything here, you would have expected this to go knife through butter to clip these stops, and it hasn't. So since it hasn't, don't be surprised if you, on any kind of headline, you get a bounce even to this level or higher, because I think here also in terms of sentiment, in terms of flow, this is the most bearish we've seen in a long time. So the risk is for some kind of what would surprise most would be an upside move, not a downside move. I still think ultimately, as we've been saying since for a couple of years, that this gets much uglier before it gets better, but right here we would be cautious. And the same kind of action there, which is relative to that DXY, we've discussed it in terms of trades in the webinar on Friday, and also I posted these on the Twitter feed, is just be cautious on Aussie, right? Because everything here, if we don't get a daily and weekly close below these lows now, our base case is still that the surprise is an ugly one, and it's for a move back into the 973 mark. The other one is Kiwi, very similar, with the way the market's been trading, etc. You would have expected that these lows would have been taken out very easily. So the fact that it's still holding this level, and despite the way the market's trading, etc., it hasn't really broken down hard. It's still holding this zone. You have to be a little bit suspicious. And look at it this way, right? To the downside, right? It's being defended. It could get ugly, but to the upside, all these shorts need to take profit, right? And the market is still very long stocks, the market's still very long dollars, the market's still very short VIX. So here, the surprise, you could easily see a move right back up into the zone. So be a little bit, I'd be a little bit cautious on that, okay? So as always, wishing everybody an awesome week. Talk to you guys soon. Thank you for liking, thank you for sharing, and let's see what we get. Finally, things are getting interesting. Finally, we're getting two-sided market. Finally, that volatility is crept up. Finally, we're getting decent scalping ranges and things set up also from a structural or swing perspective. So we can't complain. Our base case is it should stay like this until the end of the year. So may it last. Okay, have an awesome one. Take care, guys. Bye-bye.